Welcome to Japan, the land of the rising sun, anime, sushi, and technology. It's a fascinating country with a rich history and culture, not to mention a very interesting economy. Over the past 30 years, Japan's economy has been a real roller coaster ride. In the 80s, Japan was the envy of the world with its booming economy, cutting-edge technology, and world-renowned manufacturing prowess. They were seemingly ahead of the curve in many respects, and their economy was the second largest in the world, just behind the United States. However, things started to go south in the early 90s. Japan's real estate and stock markets experienced a massive bubble, which eventually burst and led to a major financial crisis. The government tried to stimulate the economy with fiscal and monetary policies, but it just wasn't enough to get the economy back on track. Despite the challenges, Japan has continued to innovate and make strides in certain areas. They've remained a leader in technology and robotics, and they've also been at the forefront of developing environmentally friendly practices. But unfortunately, Japan's economy has stagnated in many respects. The country has been stuck in a low-growth, low-inflation, and low-interest rate environment for many years. The aging population and declining birth rate have also put pressure on the economy, as there are fewer people to support the workforce and drive economic growth. There's no denying that Japan has had its ups and downs over the past 30 years, but the current state of its economy is certainly a cause for concern. It'll be interesting to see what the future holds for Japan and how they'll tackle the challenges they're facing. Well, let's take a closer look at Japan's economy and try to figure out what might be causing it to stagnate. There are certainly some unique factors at play that are contributing to this ongoing issue. First and foremost, Japan's demographics are a major challenge. The country has an aging population, with a high percentage of people over the age of 65. This demographic shift has resulted in a declining workforce and a shortage of younger workers to replace those who are retiring. The result is a lack of new ideas and innovation, as well as a reduced consumer base to drive economic growth. Another factor that is unique to Japan's economy is its corporate culture. Companies in Japan tend to prioritize stability and continuity over innovation and change. This has resulted in a reluctance to embrace new ideas and take risks, which can be a major hindrance to economic growth. In addition, there is a tendency for companies to prioritize the needs of their shareholders over those of their employees or the wider community. This can lead to a focus on short-term profits over long-term sustainability and growth. The government's economic policies have also played a role in Japan's stagnation. For many years, the government has pursued a policy of fiscal stimulus in which they have used government spending to try to boost the economy. However, this approach has had limited success, and it has resulted in a significant increase in government debt. The government has been slow to implement structural reforms that could address some of the underlying issues in the economy, such as labor market rigidities and a lack of competition in certain industries. Another unique factor in Japan's economy is the prevalence of deflation. Unlike inflation, which is an increase in the general price level of goods and services, deflation is a decrease in the general price level. This can be caused by a variety of factors, including a lack of demand for goods and services, an increase in productivity, or a decrease in the money supply. Deflation can be harmful to an economy because it can lead to a decrease in consumer spending and investment, which can in turn lead to a further decrease in demand and economic activity. Is it time to finally agree that infinite growth in a finite world is impossible and not sustainable for any economy? Japan's economic model certainly provides us with some interesting insights into the question of infinite growth in a finite world and whether or not it's sustainable. As I mentioned earlier, Japan's economy has been through a lot over the past 30 years. They've had periods of growth and prosperity, but they've also experienced significant challenges and setbacks. One of the key issues facing Japan and many other countries around the world is the question of how to sustain economic growth in the face of finite resources and environmental constraints. The concept of infinite growth in a finite world is often associated with the idea of endless expansion, where economic growth is viewed as an unending process that can continue indefinitely. However, as we've seen with Japan's economy, this simply isn't the case. There are limits to growth, and we're starting to see the effects of these limits in many areas of the world. One of the main reasons why infinite growth is not sustainable is that it relies on the assumption that resources are limitless. In reality, resources are finite, and as we continue to consume more and more of them, we're depleting them at an alarming rate. This means that eventually we'll run out of resources, and our economic growth will come to a screeching halt. Another reason why infinite growth is not sustainable is that it often comes at the expense of the environment. In order to fuel economic growth, we often rely on the extraction and consumption of natural resources, which can have devastating effects on the environment. This can lead to things like deforestation, pollution, and climate change, all of which have significant economic and social costs. So, what can we learn from Japan's economic model? Well, I think one of the main takeaways is that we need to start thinking more critically about the concept of infinite growth. We need to recognize that economic growth is not an end in itself, but rather a means to an end. We need to focus on creating sustainable, resilient economies that can thrive within the limits of our finite resources. This means adopting new economic models that prioritize sustainability, innovation, and long-term thinking. It means investing in renewable energy, sustainable agriculture, and other environmentally friendly practices. It means rethinking the way we measure economic growth and placing more emphasis on well-being and quality of life, rather than just GDP. What lessons can we draw from Japan's experiences with economic stagnation, inflation, and government intervention over the last 30 years, given its reputation for being ahead of the curve? Japan's economic model offers us a number of important insights into the nature of economic stagnation, inflation, and government intervention. One of the key lessons we can draw from Japan's experiences is the importance of recognizing the limits of government intervention. Japan's government attempted to stimulate the economy in the wake of the financial crisis of the early 1990s. But these efforts were largely unsuccessful. The government struggled to find the right balance between fiscal and monetary policies, and in some cases, its policies actually exacerbated the problems facing the economy. Another lesson we can draw from Japan's experiences is the importance of addressing underlying structural issues in the economy. Japan's economy has been hampered by a number of structural problems, including an aging population, a shrinking workforce, and a lack of innovation in some areas. These issues have made it difficult for the country to sustain economic growth over the long term, despite its many strengths in other areas. Another important lesson from Japan's experiences is the need to address inflation and deflation. Japan has experienced both inflation and deflation at various points over the last 30 years, and both have had significant impacts on the economy. Inflation can lead to higher prices and reduced purchasing power for consumers, while deflation can lead to lower prices and reduced economic activity. Finding the right balance between inflation and deflation is essential for creating a stable and sustainable economy. Perhaps the most important lesson we can draw from Japan's experiences is the need to adopt a long-term perspective when it comes to economic policy. Japan's government has been criticized for taking a short-term approach to economic policy, focusing on immediate results rather than long-term sustainability. This has made it difficult for the country to address underlying structural issues in the economy and has contributed to its overall stagnation. Japan's experiences over the last 30 years offer us a number of important lessons about economic stagnation, inflation, and government intervention. By recognizing the limits of government intervention, addressing underlying structural issues in the economy, finding the right balance between inflation and deflation, and adopting a long-term perspective when it comes to economic policy, we can create a more stable and sustainable economy for the future.